Good morning, traders. Today is Thursday, the 28th of July. I'm Paul. I'm with GammaEdge, and let's get started. Pause your players, please. Read this. Important to you, important to us. If you agree to this, hit the play button. Market model continues to continue on the long side. That's first of all. Large event yesterday with the news coming out of the FOMC caused a major adjustment in the SPX, and as a result of that and just general bullishness starting the morning, I think in part with the earnings that were after the close the previous night, we started the day with net buying, and you can see that in the cumulative tick here. When we started crossing some of the shorter term moving averages here shown in white, these gives us confidence of the short term trend, and certainly at this point right here, an initial indication to get long again. We were already long, but this is a re-entry signal, and then as we get these crossings of the moving averages with themselves, that is a confirmation to continue long. On the longer term, we're in day, I think, 7 or so of the longer term confirmation where the shorter term moving average, showing here in red, is above the cyan line. We have completed the inversion. The inversion is the strongest cumulative tick timing signal that we have. It tests incredibly well over 10 years of history. And as long as we're in this inverted, what we call normal or bullish phase, we definitely want to be looking at the long side and minimizing our short side. So all of that being said, as long as the white CT remains above the ribbon, we're in good shape. If we start cutting down through it, then obviously all bets are off. Taking a look here at the SPX, you can see a lot of green arrows. We've had the net negative gamma come out of the complexes, and we've had net positive gamma go in. This is because of short-term puts being removed and long-term calls being added. In addition, we are actually moving up the structure with yesterday's movement, and that too will influence your overall gamma presentation. A couple of key things to look at here. So this is yesterday and then the previous day. What's key here is you can see that we're getting a rapid increase relative to the previous day on the net positive gamma. This means that we have far more calls going into the structure, and because we are moving up, the influence of the positive gamma is much up due to existing calls is much greater. So that will have an influence on dealer reactions. The SPXA, which is the AM settled monthlies only instrument, you can see is still showing a bearish setup where you've got net negative gamma still outpacing net positive gamma, but we are constructively moving up, and I want everyone to be aware of that. Taking a look here at the SPXP, which is the PM settled, these are your daily, your quarterlies. You can see that net negative gamma is dropping, net positive gamma is going up, and by a significant amount compared to the previous day. These two instruments, the SPX PM settled and the SPX AM settled, comprise the combo. So this structure that we're seeing here is reflected over here. So that's how you read this chart. Levels for today, very significant change here at the 4,000 strike. I will be candid, it surprised us. We did not think that this was going to happen as fast as it did. So a combination of the news event and the ZeroDTE today flipped the 4,000 strike by a net notional delta of approximately $50 billion. That's a very, very large amount. We have never seen that occur. And that's going to change a little bit how we approach the markets and how we think here. The ZeroDTE, largely without comment. You should know by now how to read this. If not, come into the Discord and ask some questions. I just want to point out this 4,000, 4,005 strike. Clear transition from the ZeroDTE today. Today is Thursday. Typically they're a little weaker. They're not very big. We are up above this area. We're sitting right at the plus GEX level, the maximum ZeroDTE gamma exposure for the complex. So as price moves up, if it moves up here today, moneyness will flip, and that'll be significant. Now remember, the ZeroDTE on the SPX is cash settled. There is no real reason for them to monetize into the close, except if they want to lock those profits in before 4 p.m. Eastern time. To the downside, 39.50 is the line in the sand on the ZeroDTE. Below this level, the moneyness flips to the downside, and you can see the net negative gamma that starts building as we go south. So just keep this in mind. We're probably going to remain in this playing range. I'd like to see us stay above the 4,000, 4,005 level, but there's no guarantees of doing that. And you'll see why here in a second. So this is the combo complex. We've had a very, very significant change. I would urge everyone to go back and either watch yesterday's video or download the presentation from yesterday in the Discord and just look at the presentations side by side. So first of all, very, very large amount of green. All the net notional delta dollars here have flipped to the green side, and have, for the large, all intents and purposes, have negated the negative side. Now we still have some negative here because of the JPM hedge that's in September. This is at the 4,005 strike. We've got 46,700 short call sitting there, and that's given us this. This is what flipped a very, very large amount yesterday. We've never seen a $50 billion reversal and move, and the fact that we are watching that happen in front of our eyes, coupled with the news event, coupled with what's existing here in COI and POI, is significant. So we're surprised, but we're looking at that and want to definitely understand that for the next time it happens. A couple key things. 4,100 is now the new level. We've moved up from the 4,000 strike to the 4,100, and if this remains intact today and tomorrow, we're actually showing a projection at the end of today, or end of tomorrow, excuse me, Friday, of going up to 4,200. This doesn't mean that the price is going to 4,200. It's just that some of the calls are going to get monetized between today and end of business tomorrow, and it's going to leave that 4,200 strike as the exposed strike. To the downside, 39.35, 39.40 is where net negative gamma really starts rearing its head for the bulls, or excuse me, the bears. And below this level here at in the transition is where we will see that the upper part of the transition at 39.60, 39.65 is that area, and you can see there's just virtual weakness here. There's not a lot here. So we do expect a drop through this if we do lose the 4,000 strike. There's not a lot below 4,000, so you can see where in the overall structure where the bulls would start losing the battle and the bears could reclaim the battleground. The SPX structure kept it fairly simple today. 3,600 is still negative gamma exposure dominant for the entire SPX combo. The 4,100 has retaken the lead here. It's been bouncing from 42 down to 4,000, now up to 4,100, so just be aware of that. We closed right here, so we're well above a dominant line. This is the first time this has happened in a long time, and this should embolden the bulls and challenge the bears, that's for sure. The JPM short leg is here. We've bridged the Rubicon to a certain extent, so I am looking personally at this as being support. It's possible, certainly, that we could go down, but you can see there's nothing much below us, and if we do go down, we could fall back into that listless area that we've been playing. Finally, taking a look here, what's the summary? So the short-term model, this is by the cumulative tick model. We are up. The long-term trend remains intact and upward. The daily change in the wing charts is showing that net negative gamma is coming out, net positive gamma is going in. Bias is upward. The line in the sand right now is this 4,000, 4,005. We'll be looking to play long against that, so any pullbacks, we think this would be areas for entry. Of course, use the market model where appropriate. and you never ever think about getting out over your skis in this. Just be deliberate and manage your risk. And then the 39.10 is that long put leg. It rolls tomorrow. We think it's being marginalized as we move away from it, and those long puts right now have a collapsing delta, which is moving towards zero since they are OTM. So with that, I will bid you farewell for a Thursday. If you like today's content, I know it's a little abbreviated from what we normally do, but if you like today's content, come join us at GammaEdge.us. We got a lot of discussion going on about yesterday and what we're seeing here today. Just click on the pricing tab when you get to the web link, and that'll take you to a sign-up page. That'll get you into the Discord 14-day free trial. A lot of tools turned on, all the tools turned on actually, and like I said, a great group of traders, all experience levels, all different portfolio sizes. It's a great group. GammaEdge is with an S here on Twitter and on YouTube. Of course, if you like today's content, ask that you smash that like button. Let me know that I'm on the right track. And of course, please always subscribe so you get notified next time we post something. So with that, I will leave you. I hope to see everybody in the Discord and make it a great Thursday. Thanks, everyone.